In today's video, we're going to look at a step-by-step process of buying a ETF.
So, what is an exchange traded fund? An exchange traded fund or ETF is a basket of investments such as stocks or bonds. Exchange traded funds can be an excellent entry point into stock market for new investors. They are cheap and typically carry lower risk than individual stocks since a single fund holds a diversified collection of investments. So, what are the types of ETFs? There are many types of ETFs that can expose your portfolio to different assets and markets. These include stock ETFs, bond ETFs, specialty ETFs, sustainable ETFs, commodity ETFs, factor ETFs, and currency ETFs. By including other sectors and types of investment within your investment portfolio, you're diversifying your assets. Diversification brings down the risk. In the event that one company or sector doesn't perform well, you have many others that may support the performance of your portfolio as a whole. You should evaluate your financial plan to decide if any of these types of ETFs are right to include in your portfolio. You'll need to consider investment goals and risk tolerance. So, what are the advantages of investing in ETFs over stocks? ETFs provides access to many stocks across various industries. It has a lower expense ratios and fewer brokerage commissions. It manages risk through diversification. And there are ETFs that exist that focus on targeted industries. Now that we saw the advantages, is there any disadvantages for investing in ETFs? Some actively managed ETFs have higher fees which may cut down your profits. Single industry focused ETFs limit the diversification, which is the main purpose of ETFs, and their lack of liquidity hinders transactions. So, how to buy an ETF? Here is how to buy the best ETF for you and how to buy them in just a few steps. Step 1 is to open a brokerage account. You will need a brokerage account to buy and sell securities like ETFs. This can be done online and many brokerages have no account minimums, transaction fees or inactivity fees. Opening a brokerage account may sound daunting, but it's really no different than opening a bank account. If you'd rather have someone do the work of investing for you, you might be interested in opening an account with a robo-advisor. Robo-advisors build and manage an investment portfolio for you often out of ETFs for a low annual fee, typically which is 0.25% of your account balance. Because robo-advisors offer curated investment portfolios, you may not be able to find and invest in all ETFs. To screen and invest in the specific ETFs you want, you'll need a brokerage account at an online broker. Step 2 is to find and compare ETFs with screening tools. Now that you have your brokerage account, it's time to decide what ETFs to buy. Whether you're after the best performing broad indexed ETF or you'd like to search for others on your own, there are a few ways to narrow your ETF options to make the selection process easier. Most brokers offer robust screening tools to filter the universe of available ETFs based on a variety of criteria, such as asset type, geography, industry, trading performance, or fund provider. There are thousands of ETFs listed in the US alone, so screeners are critical for finding the ETFs you're looking for. Try using the below criteria in your broker screener to narrow them down. Number 1 is administrative expenses, also known as expense ratios. These expenses cut into profit, so lower is better. According to Morningstar, the asset-weighted average expense ratio for passively managed funds was 0.12% in 2020. So this could be a good number to start with in your screener. You'll find though that some popular ETFs have expense ratios much lower than this, so don't be afraid to screen for below the average. The second thing you look for is commissions. These are the fees you pay per transaction when you buy or sell an ETF on a brokerage account. Fortunately, commissions are virtually non-existent at most online brokers these days, but it's a good idea to check before you buy. Brokers that charge a commission often offer select ETFs commission free. Third thing to look for is the volume. This shows how many shares traded hands over a given time period. It is an indicator of how popular a particular fund is. The fourth thing to look for is holdings. You'll be able to see the top holdings in the fund, which simply means the individual companies the fund invests in. The fifth thing to look out for is the performance. You know the saying, the past performance doesn't indicate the future returns, but it still can be useful to compare the performance history of similar funds. Look at the fund's long-term performance. So 3-year, 5-year or 10-year performance instead of 1 year, for example, to get a sense of how it has performed historically. The last thing to look for is trading prices. ETFs trade like stock. You'll be able to see current prices, which indicates how many shares you can afford to buy. The third step is to place the trade. The process of buying ETFs is very similar to the process of buying stocks. Navigate to the trading section of your brokerage's website. In this context, trade means you're either buying or selling an ETF. You'll buy the ETF using its ticker symbol. We'll see more on that and other basic terms you'll need to know. The ticker symbol is the unique identifier for the ETF you want to buy. Be sure to check you have the correct one before proceeding. The price is the current trading price and it's determined by the following. A bid is the highest price buyers are willing to pay. An ask is the lowest price sellers will take in exchange. Number of shares is the number of shares you wish to buy. The order type is the way you want to purchase the stock. The market order is to buy as soon as possible at best available price. The limit order is to buy only at the specified price or lower. The stop order is to buy once the specific price has been reached, which is the stop price, executing the order in full. The stock limit order is when stock price is reached, trade turns into a limit order and is filled to the point where specified price limit can be met. The next criteria is the commission. Price per trade the broker will charge for its service is the commission. Most major brokerages now offer commission-free ETF trades. The funding source is the bank account linked to your brokerage account. Be sure it has sufficient funds to cover the cost. And here is what that looks like within a brokerage account. In my case, Vanguard, which is my broker. So here I am selecting the buy option, choosing the ticker symbol as SOXX, number of shares as 1, selecting market order, duration as day, and notice all the terms we discussed before in the window. Before you execute your order, you will have an opportunity to double check that everything is correct. Make sure your order is set up as intended. Check the ticker symbol because the ETFs with similar ticker symbols can be widely different. And check for the order type and make sure that you haven't made a fat finger error. For example, typing 1000 shares when you intend to buy only 100. Step 4 is to sit back, relax and watch your ETF grow in value over time. These funds can help form the basis of a well-diversified portfolio and serve as the first step in a long-lasting investment in the market. There is no need to compulsively check how this ETF or your other investments are performing. But you can access that information when you need it by checking the ticker symbol on your broker's website or even just by typing it into Google. And here are the list of some high-performance ETFs which are suitable for beginners and their performance and returns as of October 2nd, 2023. So now that we have seen a lot about ETFs, so what should be your investing strategy? If you are a beginning investor in ETFs, dollar cost averaging or spreading out your investment cost over a period of time is a good trading strategy. This is because it smooths out the returns over a period of time and ensures a disciplined as opposed to a volatile approach to investing. It also helps beginning investors learn about the nuances of ETFs investing. When they become more comfortable with trading, investors can move out to more sophisticated strategies like swing trading and sector rotation. I hope you enjoyed today's video and let us know your thoughts and comments. Subscribe to our channel so that you won't miss any of our videos on personal finance and making money online and you get notified. Thank you for watching. See you next time.